All righty, welcome. It is finally Friday. It is November 3rd, 2023. Great week in the trading, great week in the markets. Let's dive into what happened today and take a look at what's going on, and then we'll get into the account and see what we did today and give you some ideas of where we're going and what we're doing. All right, so jumping in to SPY, another big day, gap up this morning, some pretty decent economic news. And I guess it all depends on who you are as to whether that was decent economic news. Non-farm employment dropped to 150,000. It was previously 297,000. They were expecting 178, and it came in at 150. So drop in non-farm employment. Unemployment rate ran up to 3.9%. So I guess, again, if you're looking at this from a Fed rate hike standpoint, it's a bonus. So bad news right now is good news. Great news if you're in the market and you're expecting the Fed to halt and not raise anymore and maybe start to pull back some of these rate hikes at some point in the future. Here, bad news if you're one of the 3.9% people that are affected by that unemployment rate. So again, bad news is good news in the market. Then waiting till 10 o'clock, after those came out, we've got the ISM Services PMI today, which dropped to 51.8, was expecting 53. Anything above 50, growth, economy is growing. Anything below 50, economy is slowing. The fact that it's dropping from 53.6 last time to 51.8, and they were expecting 53, means things are slowing down a bit. Okay, bad news, but bad news is good news. So there's where we are in the markets today. And of course, the markets loved the fact that there was bad news for people who are trying to work and bad news for the economy, which is great news for the Fed potentially stopping their hikes. So that made us gap up again today. So we are on our fourth straight gap up session, fifth, if you really want to look at it that way. So gap. Here, market getting a bit overextended and a little bit frothy. I think this move was a little exaggerated, but there's so much pent-up demand. And Igor, who is an unbelievably fantastic trader and the king of our service on the Discord, who started the Mr. Top Tick Discord, he made the analogy that it was like a beach ball that was held underwater too long. I think that was a perfect analogy today. And that's what you saw for this entire week. That beach ball had been held down for so long that finally when it was let go, it just popped and blew up through the surface, popped higher. Markets just ran from 410 here on SPY all the way up to 444. So it's a pretty good jump, being up almost 300 points if you're looking at SPX and 30 points here on the SPY. That's a pretty big jump in just 5 trading sessions. All kinds of technical improvement in the market. Now, if you're looking at the daily, and let's focus there, we ran back up. We're going to try to fill this gap again for the second time. Let's see if we can get that done. Got to get to 438 in order to fill that gap. We did break this downtrending channel today on this gap up. We'd already broken above the 21 EMA. We'd already broken above the 50 EMA. MACD's been rising for the last 5 sessions. RSI has been rising from oversold, broke the 50 here yesterday officially, and then just continued to run higher. So momentum is strong. You got to throw everything out the windows, all kinds of levels, GEX levels, all of that stuff. Volume levels, you know what? It's all out the window when momentum gets going. So when Momo gets rolling, man, you just got to get out of the way and take advantage of it. And we did a great job of that as well. The entire week here stretched the entire length of the channel and then some, as we just saw on the weekly. Not quite to that bearish PSAR dot here on the weekly, but doggone close. Any kind of a gain next week to try to fill this last little gap here that's up here. If we try to fill that gap, we should get a bullish PSAR reversal signal on the weekly. All kinds of interesting movements here, looking decent, but one week doesn't make that. But remember, is this number one? Is this a rally in a potential bear market overall? Is it a pullback in a bull market? Hard to say, but rallies in bear markets are extraordinarily sharp and violent. And maybe this is one of those. We'll see what happens. I'm not being very optimistic here overall. We expected a pop. It's a bigger pop than I thought we would have. Is there some legs to it? Absolutely. You got some seasonality kicking in here. People feeling pretty good. FOMO's kicking in. A lot of this was short covering as well for some people on it, and some decent earnings mixed with some earnings out there. But overall, it was a signal for some pent-up demand for people to jump in and some shorts to cover on this rally, which really fueled the whole thing. Question is it sustainable? Well, we're right back to this previous high, which was a lower high, by the way. So, we've had lower low, lower high, lower low, lower high, lower low. You're getting close to potentially an equal or higher high on this move. If it's a higher high, well, then we'll look for a potentially higher low on any pullback to maybe the 21 or the 200. Then we'll see what happens. You're heading into a good time of the year for markets to potentially move up. You've also got a potential recession coming next year. We'll see. Is this all just a big fake out? Who knows? But really, for us as traders, doesn't really matter. And if you're a long-term investor, probably a pretty good week for you. You probably needed some of that to make you feel a little bit better. If you're a bear here and you were thinking on this break of this downtrend channel that, we're going to get paid, you got slaughtered this week. So bears got slaughtered, bulls got fat. Pretty quick up move here. Do you trust it? I don't know. I'm not sure that I trust it 100%. All right, taking a look at the Qs, pretty much the same thing, but we were not able to get above this channel. But we did move higher. Looks fantastic on the daily here. If you get any kind of a pullback, I think that'll be good. However, you've left all kinds of gaps along the way that at some point are going to want to be filled and need to be filled. And I will assume that those things will be filled at some point in probably the near future, at least a handful of these. But good looking Qs. IWM had a phenomenal week. Gapping huge. Gapping yesterday. Gapping huge again today. Running wild. So, IWM runs wild here. Reversing off of lows. One bar reversal on this downtrend, but bounced exactly off this support level that we had talked about. So now do we run to the top of the channel? So I think that's what remains to be seen. We'll see what happens, but really good overall move and strength here on IWM on the small caps. If we look at the put to call ratio, we won't get too much into this today, but dropped again. We're watching our 10-day moving average on this continue to drop. The more the put to call ratio 10-day moving average drops, the better that the market's going to be doing. So the more we drop here, and you've got RSI heading lower, you got MACD heading lower on the daily chart. You've got the 50 or the 21 EMA breaking below the 50. And then this one, if we look at the 10-day moving average, that's been starting to fall. That's really where we're hanging our hat. That 10-day moving average gets cranking to the downside, markets are going to be rising. So you're seeing a little bit more call volume there. VIX dropped again down to 1491. VIX is back to dead again, back in the $14, $15 range. US dollar on the session fell again. So the dollar's been tipping over. Today triggered a bearish PSAR signal on the dollar. We broke below the 21 yesterday. We broke below the 50 EMA today. MACD heading lower, RSI heading lower on both the weekly and the daily charts. A lot of relief coming in here. As the dollar drops, that's going to be good for a lot of things that we trade, for Forex to the markets, watching the dollar drop. Before we hit TLT, in fact, we'll take a look at TNX. So the 10-year Treasury, looking at the rates, gapping down again today, finishing off of their lows, but still gapping down. MACD and RSI falling on the daily. MACD and RSI falling for the second week in a row. So you're definitely seeing rates coming off their highs in a pretty strong fashion. However, we did finish off of the lows on the session. So we finished about halfway between where we opened and the lows of the day. So can you read anything into that? Not necessarily, but it's a pretty interesting looking reversal, hanging man or hammer candle here, where you could get some potential reversal. We'll see. How's that treat TLT? Well, we've been talking about TLT for a while now, and TLT gapped up pretty heavily, but then finished all the way down its lows of the day. So it was barely up 0.7%, nowhere near what the markets were up, at over 1%, and the Russell up almost 3%. But you did get another update on TLT. I talked about it. We've been talking about this for weeks, and since July, I've been extraordinarily bearish, telling you to stay out. Don't try to catch a falling knife. Don't try to call the exact bottom. A lot of people have been just averaging down. That's fine. I think averaging down is one of the most dangerous strategies anyone can employ. Okay? Averaging down is basically adding to a loser. I would rather you average up. It's one of my rules. Never average down. Always average up as you go. So if you average down, for most of you, you're still probably underwater here, unless you got in at the very bottom. But I want to see this thing bottom. I want to see the underlying improve. Well, now we've got a second week, so this gives us a lot more comfortability here. We have a second week on the weekly chart here, second week of MACD moving higher, second week coming off of oversold levels and moving up on the RSI. So now I think you've got something to hang your hat on when it comes to TLT. I think this is an opportunity. I would say any weakness here would be a good opportunity to potentially start looking at getting in here. MACD running higher, RSI is running higher, breaking the 50 here yesterday and moving up a bit more today. I like it. The way we've been playing it is we have been playing ZB, which is the bond futures. We have been playing this every couple of days, every day, selling naked puts, selling naked puts. These have been turning over at a pretty rapid pace. We're all out of them. They've all been moved into the winning category. So we have closed out all of our profits at 50% on every single one of those naked puts. I'll wait to see if we pull back at all here, and we'll keep it going. But I think that's the way I'm playing it, is instead of trying to bet that we go long and you get giant moves here, which I still don't think it's going to get massive moves. I think you're getting a good bounce in TLT and in bonds right now. Rates are falling. How far will they fall? I don't know. The Fed's not changing their rates. Okay, they just have stopped increasing for now. So they have not started to pull back. So really, there's no reason for rates to massively change until the Fed starts to signal, okay, we are done, and we're now looking at potentially pulling these off. I don't think that's happening anytime soon, at least not until deep into the first or second quarter of next year, unless the markets go to hell in a handbasket. But you still have not seen all of the damage from these rate hikes really starting to get baked into the market. I think you've got that coming, potential recession, whether it's deep, hard recession, who knows? But I think you have that on the horizon. But for us as traders, doesn't really matter. We play what we see. And right now, we're seeing some pretty good moves on ZB here. And we've been just playing it and making nice profits. So while everybody else has been trying to buy these calls in TLT on moves down and are low, we've been selling puts down here around the bottom as we start to base out. And I think that's really paid up for us. So we've been making money. Now we have some money to deploy as well going long. Well, with the dollar dropping the way it has, you've got Forex moving higher. So you get the Aussie dollar here moving strongly higher today, up 1.3%. You've got the British pound moving up almost 5%, a huge up move. Bullish PSAR reversal today. MACD RSI getting rolling. Okay, big up moves in the British pound. Canadian dollar, 2 big up days in a row, up another 0.7% today, up strongly off its lows. MACD RSI running higher there. The euro huge update today, up 1% again. So two pretty solid updates here. Bullish PSR reversal again here. MACD and RSI running higher. Really think that this looks pretty good. And you've got really good weekly reversals here in the MACD and RSI as well, as we start to break through some of these particular trends. So the 10 line broken. We'll keep an eye on where this thing's going. But for right now, moving out of the downtrend and moving sideways and then exploding higher the last couple sessions, which is great for us. So doing exactly what we are looking for. ZB, we've already covered. ZN, which is the 10-year notes, again, doing fantastic, up 0.7% today. Oil continues to be weak here. So both a weekly and the daily charts have been looking weak. On the weekly, MACD, RSI just been falling, breaking the 50 this week. So pretty bearish looking tone on oil, and I'm still a little baffled by it. It's great for our positions for the most part. We've got 112s, and we put another 112 on today. We will keep adding these trades as long as the market is giving us craziness like I think it is here. With the conflict in the Middle East and the inventory low levels, people have to buy oil, and oil could pop significantly higher any day now. So we are back to levels well before the conflict. We're back to levels in oil that were last seen at the end of August. So that's a pretty far way to go back to August. What has caused oil to drop so substantially to where it's negated the last 3 months worth of gains, essentially, while there's a conflict in the Middle East and a lot of saber rattling by Iran and others out there, who knows? But I'm still playing that this thing has a bottom to it somewhere. We're not going to call a bottom, just like we didn't call the bottom on TLT. I'm not advising you to get long here on CL, but I think playing the 112 game is the best way to go. Our upside has no risk to it. So we have no risk to the upside, and our downside is sitting somewhere around the 60 mark for the naked puts. So if we fall into the trap, we're going to make some significant money. And we've got one, I'm taking a look right now, just in our portfolio. We've got a December 112 at 74.75 for the trap. So the top of the trap. So we're 5 points away from the trap, from the one trap there. We just put another one on today. And then we've got another one where the trap's at 78, 79 area to start the trap, down to 68. 68 barely even, doesn't even appear on the daily chart here. You got to drop all the way below the 200-day moving average and the bottom of the Bollinger Band to hit that. So oil would have to drop significantly more. And I think it's already getting to a part where, not bottoming, okay, but I think you're getting extended. It's starting to get extended a bit, and the 2 ATR is down here at 78. That's what I'm pegging here, 78, 79. If it gets into our trap, we're going to make some significant money. The trap right now on this oil or CL futures, the trap is already up $300, and the naked puts are up $1,200 already. So not only are we looking at something that potentially is going, we're up 116% on a trade that we look for a 100% winner on. We're up 116% because you're getting paid extra for the trap profit as we get close to it. And the naked puts still have a ways to go. The naked puts have not even come close to being taken off. They're only at a 60% gain because of the drop. So we have a long way to go to make a lot more money on this particular trade. So I'm excited to see where this particular trade ends up on oil, and we put another one on today. All right, so there's our take on oil. If we take a look at gold here, a good little break this week on gold, settling down, moving sideways on this particular futures contract. MACD had been falling, RSI is dipping a bit. The weekly just still in an uptrend, solid weekly above the 21, above the 50. Same thing here on the daily chart. It's been a nice sideways mover now for really 2 weeks after big, massive 2-week up moves before that. So I like where we are on gold. We're sitting on Two strangles. We already had two strangles closed this week, so fantastic profits on gold. I've got another one sitting at 34% winner, and I put one on 2 days ago that's already at 27% in 2 days. Anything more here, I might take it off early and just put another one on. Why wait 1 month or so to make 50% when I've already made 27% in 2 days? That's a pretty good profit there. So if you're making 13% a day, go ahead and put that in there. Probably some furus on YouTube would advertise the fact that they're making some kind of 10% a day. Hey, join us and make 10% a day. You know what? It's one strangle. I timed it right. We put it on with high volatility. We're in good shape. If we take a look at oil volatility, it continues to drop here. So it's down significantly off its highs and falling. If we're looking at gold volatility, it's just gapping down even further. This thing has been cut significantly, over 25% drop in gold volatility, which is why we are winning here. So good stuff on gold. And then we've also got copper here, copper just moving nicely sideways. This has been a beautiful sideways move on copper almost since April. So we've been doing really well on that particular trade here on copper. All righty. Let's take a look at the sectors for today. And I will take a quick look at these sectors. Right, sorry about that. On the sectors, first thing we're going to see here when looking at the sectors, semis up huge again. So big move up in semis. Biotech also gigantic move today in biotech, up almost 5%, 7.6% increase again today on semis, which are trying to break out of this descending wedge. Regional banks up another 3.6% today. So regional banks are really leading the charge here, helping both the Russell and SPY. Really strong moves on the Russell. Looking at retail, up almost 3%, gapping up again today. Looking at pharma, moving higher, gapping up again today, up 2.4%. Real estate up 2.4%, gapping up as well today. If we look at the XLB, which is your materials, gapping up again today, up 1.6%. XLC, your communication sectors, gapping up again today, 1.5% higher. XLY, which is your consumer discretionary, gapping up 1.4%. Financials up 1.3%. Tech up 1% today, which matches the NASDAQ pretty much. And then leading the bottom has been energy. Energy's down. It was up decently yesterday. I like the way energy's hanging in there, though. I think this is a good opportunity on energy to move higher. So you've got the daily reversing on MACD, RSI starting to move higher. Didn't get to really oversold, but still moving higher up to that 50. Didn't quite break it. Sitting right at this particular line. If we extend this line out a bit more, okay, we've nailed it twice in 2 sessions. So pretty valid, I think, resistance area here. If we can break this, I think energy starts to come back into the fold. And I think we're just waiting to see what happens with oil. All right, and then Apple, not as bad a damage today on Apple as it appeared after hours yesterday when it looked like 171 was the target. It dropped and then finished just a little lower today, down 0.5%. So Apple really held up in there despite revenue miss and some poor guidance as well, and Apple just moving slightly lower today. Microsoft having a good day, up another 1.2%. Amazon pretty much a sideways day. Still looks good. I like it here. It's not overly going crazy. However, we are above the 2 ATR on Amazon. We are above the 2 ATR, heading to the 3 ATR on Microsoft. Meta here making a move. I like this move on Meta, breaking the 50, MACD moving higher, not overly done, right in the middle of its bands, above. And I think Meta looks like a decent stock play. It looks like you still have some opportunity on it. Google heading up again today, moving into the gap area. We'll see if Google can fill that gap. NVIDIA having another big up day as we head into earnings in a couple of weeks. It looks strong. Nothing here stopping NVIDIA from moving higher. Tesla, kind of a sideways day today. Now, it did trigger a bullish PSAR reversal signal. You've got MACD and RSI both climbing. So those are doing well here. So Tesla still looks decent, even though it's had a pretty good run for the last couple of days, like everything else has. Question is, can it get above this 21 EMA? Can you get Tesla any higher? This is not a really great candle today. Looking at, hey, it tried to move even higher above the 21, failed, closed on its lows of the session today. All right, there's pretty much what we saw in the markets. Let's take a look at what we've got going in the accounts today. All right, so we finished the week here. Delta 158. So really great Delta. Love where we are. We're extraordinarily Delta neutral on this account. Theta, this is kind of an estimated Theta, 1173. It's still pretty good, 0.36. Tastyworks has Theta up over 15,000 because I've got some goofiness going on with the Aussie Dollar 112 that's expiring today, messing with the Theta. So this is my best guess calculation manual on Theta, which is still pretty good. We did move up again today, so the account's up even more today. 326,626, another new all-time high in the account. So we're doing fantastic there. BP usage did ratchet its way up a little bit on the session. 204 was the BP usage. It did move higher. We did put some trades on today, so we'll talk about that. And we were able to generate another $950 today. If I go back, the last time we had a losing trade was on October 3rd. So we have had no losing days. We have not had a losing day since October 3rd. So for 1 month, we have not had one losing realized gain or loss day in the last 30 days. Pretty good streak like that. Doesn't mean we don't have losing trades. We just have not had a losing day. Overall with our realized gains, we made another $950 today. That puts us at $10,575 for the week. Just missed last week's, but that's two $10,000 weeks in a row on this account. So fantastic 2 weeks in the books. I mean, 5,700 the week before that, 3,000 the week before that, and then this is when we had a losing week before that due to that last losing day that we had. Okay, and we had a couple losers before. I'm happy we have a pretty good streak going. But two $10,000 weeks, so $20,000 generated on a $300,000 account in the last 2 weeks. I'm not going to talk about that or put that in my YouTube headlines. You guys see what we're doing. I'm telling you exactly what the account does every single day so that you can follow along with it. We're now up to 9,941 in realized gains for the month. We've hit our 3%. Okay, we're not resting. We're not stopping. We're not going to go to sleep till December. We haven't even had a 112 trade, the naked puts expire yet. We got 2 of those coming this month for over $4,400. So we got that coming this month. We've got some 112s expiring this month. So we have a lot more gains to go. Now, can we get some losses in there? Sure can. We'll keep an eye on it. But overall, liking where we are. And let's take a look at the 2 trades from today. So first trade on the day was another call credit spread on SPX. SPX gapped up on the opening session today. Pretty solid. We had an expected move overall in SPY. We had an expected move of about $20, and we gapped up 30 something at the open. So here's what we did. I'll share this with you. You can see exactly how we traded this today, and I'll pull up the times I'll walk through the 0 DTE trades, then I'll cover the 6A strangle as well. So let's go back. We'll take a look. So here's what we were looking at, and this is our day trading charts. This is how we trade, and this is what we do in the Discord as well in the 0 DTA section. So on the gap this morning, you can see here's the initial gap up on the day. So when we closed at 43.18, gapped up to about 43.52. So over 30-point gap in the first 15 minutes. The white lines here that you can see glowing, that's the 3 ATR. The reds here are the 2 ATR. Look how far above the 3 ATR we started the session on. And then we moved even higher over the next 15 minutes. So gapped up and then kept going here. If we're looking at the, in fact, let's just look at a smaller piece here. If we look at the 3-minute chart, okay, you can see this move up in the first 15 minutes to here, second 15 minutes to here is where we were. We ended up putting on at 9:52, so right around 10 o'clock. Here, let's take a look right at 10 o'clock on this candle. Okay, this candle was it for me. As soon as I saw this peak up, we were still very extended beyond the 3 ATR. Pretty solid candle up. Okay, but MACD was already starting to roll over at about 9:45. Stochastic momentum was starting to fade down a bit. So by 10 o'clock, both of these were headed lower, and RSI had come way off of these highs and was heading lower. Hadn't broken overbought yet, but that's where it was. And if we look here at the 15-minute, you can see stochastic momentum was starting to drop. Here, RSI was starting to drop from just ridiculously high 90-point levels on this. So I thought that's a great place to put in that call credit spread. And we closed it at exactly 10:25. So we closed pretty quickly. If you're looking at the 3-minute chart here, we put it on right here on this spike. And then at 10:25, right here on this big candle down, that's when we closed it. 50% winner, took in $450 on that trade. Again, just doing 10 shares of it at 90 cents, took it off at 45 cents. So made $450 on that trade. There's the anatomy of the trade. That's exactly what I'm looking for. Is I like reversal trades. Okay, not necessarily trying to guess where the market's going to go the whole day. What I'm trying to do is play an oversold move up or down without fighting the trend necessarily. But these two big gap days gave us great opportunities on the call credit spreads. And then we closed a 6A, the Aussie Dollar strangle today. This one finally just expired at a full 100% in the tail winner, making $500 on that trade. So a nice 1-1-2 trade on futures here. It's not all about ES. It's not all about the long-term 1-1-2. It's not about the FB 1-1-2 or the BA 1-1-2s. Just the standard 1-1-2 worked absolutely perfect here on the Aussie dollar. We like to have several of these running at all times. So based on the size of the account, I've always have standard 1-1-2s running. The ES long-term 1-1-2s always running mechanically on those. And then we've got other trades in there between strangles and some of the spec trades that we do that give us some of those gains. So again, nice month so far with $141 for the month. We've had 14 winners, only 2 losing trades so far for the month, no losing days for the month at all. And overall, we're up $84,000 now on the year in gains. So we've made $84,000 in realized income so far for the year. So fantastic stuff. If you like this, click the like button, please. Helps me out a lot, helps the channel out a lot, gets us some more people that can hopefully benefit from this. If you're not subscribed to the channel, subscribe, get the alerts that we're posting some new stuff, see what I'm putting out there for you, trying to help everybody. And then if you really want to dive in and get serious about your trading, come and join us over in the Discord. See what we're doing there. Monthly subscription. It's an investment in your future. And we're seeing, great opportunities. So we've got guys making $4,000 in the last 2 days just on 0 DTE alone. We've got some guys just posted today or yesterday making over 40 grand in the last month or two. If you want to get yourself there, if you want to make the money that you want without trying to day trade and do crazy stuff, you don't have to do 0 DTE. You don't have to do all those other crazy things. You don't need outlandish things. 3% a month is all I'm shooting for. Okay. If we beat it, great. Okay. We put a plan together, get us to 3% a month. Nothing ridiculous. I'm not telling you we're going to make 10%, 20% a month, a day, what have you. Sometimes things happen and we make that kind of money, but for the most part, slow and steady, 3% a month, 30-some% a year. And if we get some trap profit, then we can make 40, 50, 80% a year on it if we're lucky and the markets cooperate. If not, we're going to be plodding along at our 30-some% a year gains. Pretty good. We're going to triple or double our money every 2 to 3 years. All right. You guys take care. Have a great weekend. I hope this was helpful to you. Enjoy a fantastic rest of your evening. Have a great weekend. Stay safe, everybody. And we'll see you in the next video. Take care. Bye-bye.